Good, happy Thursday, May 7th. You've reached Dean Johnston. I'm with Fifth Third Bank. I'm a mortgage loan officer, and I'm here to give you a little brief presentation on being a first-time home buyer, the pluses, the minuses, the do's, and the don'ts. If you can roll with the first page, please. Next. So the topics covered in this presentation is owning right for you, a little comparison of if you own a home versus you rent a home, the do's and don'ts of buying your first home, what to expect from your lender, somebody like me, and some steps to help you get started. Just a little brief introduction too. I've been with Fifth Third Bank a little over 10 years. I've been helping people finance properties for 35 years this month. There is nothing more pleasurable and satisfying to me as a human being in helping people realize their dreams of home ownership. And I've created some clients for life, and I've helped them educate their kids, their children, and I've met those same children 20 years later and helped them finance their first properties based upon the recommendations and guidance they received from their parents. So the first question, next page, is owning right for you. There are advantages and disadvantages to owning a home. So we'll go with the advantages first. And primarily, it's the best and cheapest way to save money over a lifetime of home ownership. And by saving money, you're making a payment every month. A big chunk of that payment is going towards the interest on a loan. If it's a 30-year term, you're paying back principal every month. And your house payment also includes real estate taxes and homeowners insurance. But the way you're really earning your money, besides paying back at the principal, which is the payback on principal amount during the first few years, is not that significant because mortgages are upfront loaded with interest during the first 5 to 15 years of the loan. So even though you're saving money with your principal, you're building equity by owning a home, because for the most part, real estate is the best and easiest investment for anybody to participate in, that they can actually get a reasonable return on their investment. And by that, I mean, I pay $150,000 for the house right now. I put down $5,000 on the house. I'm paying principal and interest on $145,000. And every month my principal is going down a little bit. So the amount that I'm paying back is being reduced. But where I get the biggest bang for my money is in anywhere from, depending upon where the real estate market is, in anywhere from 1 to 5 years, I can pretty much be sure of it. And I was going to say I can guarantee. No, I can't guarantee anything. But the market, the real estate market for residential properties, will give you a return on your investment of annually at least 5%. And in some instances, and we're going through it right now, we've been going through it since COVID started. People who bought houses in COVID, their houses right now are worth anywhere from 20 to 40% more than what they paid for it. So that's money in the bank, that's money under their feet that they can tap into either by getting home equity loans or if they decide to sell the house, they're going to walk away with a lot more money from the sale of the house than they put into the house between their down payment and their principal balance. So is truly, in my opinion, the best and biggest advantage of owning a home versus anything else. Other benefits obviously are you're not dependent upon a landlord. You become your own landlord. If something needs to be fixed, you fix it. You fix it the way it should be fixed and the way you want it fixed. You don't have to depend upon a landlord that doesn't want to spend a lot of money on hiring contractors to fix your property. You're free to do whatever you want with the house as long as it's legal. You can knock down walls, again, pull permit if required. You can change the landscaping, you can change the siding, you can change the roof. It's your house. You have the right to do anything you want to it as long as it's legal. Disadvantages, obviously, of owning a home is that now you have added some potential cost into your lifestyle. So besides your house payment, you're responsible for when the hot water tank blows. You're responsible for the roof when the roof needs to be replaced. And last but not least, when you own a home, it's not that easy to be mobile. So, if you want to go live somewhere else, now I got to sell this house. I got to go through what I'm going through. And sorry for my background phone. So you are a little bit tied to the house versus if you rent. When the lease is up, you can go to the next place that you want to go to. There used to be tax benefits for owning a home. For the most part, those tax benefits have disappeared because of the changes they've made in tax law, which in the long run, you get more of a tax advantage by filing your taxes with standard deductions than trying to write off the cost of your interest and taxes on your home loan. Turn the page, please. We should be looking at owning versus renting a comparison. So this is just a scenario. The numbers can change based upon market conditions. But this scenario says, hey, if you own a home for 7 years and versus if you paid rent for 7 years, what would be the advantage for one way versus the other? And at the end of the day, the total payments that you'd be paying on your home right near the bottom would be about $113,000. And that same rent payment over the course of 7 years would be about $121,000. So you'd actually be paying less out of pocket just from a house payment standpoint. And the tax payment after savings don't really mean that much. But the other trick is that it shows, hey, if I own, look at my investment, my appreciation, the tax savings, again, take that out of there. The selling expense, if you were going to sell it, blah, blah, blah. But on that same $117,000, you'd walk away with about $68,000 in net profit. Again, if you're paying rent, the person that you're helping the most, for the most part, is the landlord. He or she are accumulating additional equity, additional assets, and they certainly are not going to share that additional money they're earning with you. You can count on it. Turn to the page, please. Shop for a loan. So I'm going to go a little off script of what this presentation is, how it's presented. The big thing is everybody that's listening to this is interested in possibly trying to buy a house and enjoy the benefits of owning a home. My specialty is I help people get pre-approved for loans. I help them up to a degree. I can give you some credit counseling. I'm not a professional credit counselor, even though I've been dealing with credit for the past 35 years. but I will gladly refer you to, and CMHA will gladly refer you to a handful of HUD certified credit counselors that work in Northeast Ohio, and that their whole purpose is to help people get their credit in order, get their finances in order, and so that they can be in a position where a lender will say, yeah, I'll lend you money. Sure, I'll do it with pleasure. And also, based upon the type of home buyer counseling that you receive, that certification is good for a year. And there are down payment assistance programs, both in our city and also from a national standpoint, that depending upon your income, depending upon where you're buying, would love to give you some down payment assistance. One of their prerequisites will be proof of HUD certified first-time homebuyer counseling. So you can't go wrong if you reach out to some of these counselors in the next couple of weeks or months and say, hey, I want to get some first-time homebuyer counseling. I want to learn about budgeting. I want to learn about credit. I want to fix my credit. But I, as a loan officer, I am the person that you would initially have contact with. With your permission, I can run your credit report. I can give you some solid advice as to the good, the bad, the ugly that's on your credit report, and ways, if needed, that you can get your credit and your credit scores fixed to a minimum that will satisfy the type of mortgage program that you're looking for. In this day and age, as you may already know, credit and credit score is the key to everything. And you don't need to purchase a home. You don't need to have credit scores in the 700s to high 700s. You can borrow, depending upon the type of product and program, with a minimum down of on an FHA loan, on a VA loan, and on conventional loans. You can borrow with credit scores that are in the low 600s. And I caution people that when they hear that, they say, well, you said I could get approved for a credit score of 615. Yes, but I've always said that with a footnote. It still requires a complete review of your income, your assets, and your credit before a decision can be made. So just because your credit score is some number that meets a lending program by itself, that's not cause enough to issue you an approval. It's the things that are analyzed besides credit history, credit scores are employment. Do you make enough money to cover your debt load, the new house payment plus your existing debts? And the debts that we care about are car payments, student loans, alimony, child support, credit cards with minimum monthly payments. Do you make enough money to cover not only the house payment, but all those additional credit obligations? We don't really analyze directly for utilities, cell phone, insurance, medical insurance. We're not analyzing for any of that. We're analyzing for the mortgage payment and stuff that shows details that show up on a credit report that require monthly payments. Additionally, in the income factor, what we're looking at is we need to see a history of at least 2 years continuous employment, hopefully with the same company, but not necessarily. You can be on one job for 1 year and then switch to another job, and that's your current employer. Again, if there's a continuous 2-year history of earning that same amount of money, whether it's with your previous employer or your current employer, we can count that. Then we don't have a problem saying this is employment, that this is a customer whose employment history meets the minimum requirements. Additionally, there's other sources of income that you can qualify with besides employment. If you receive alimony, child support, if you receive Social Security disability, if you receive any kind of disability for that matter, these are all sources of income that we will happily use to boost your income, to help you qualify for hopefully the house payment that you can afford, and will determine that you can afford too. Next, the other part of the four elements of credit, capital, is the house that you're buying. So until you enter into a purchase agreement, we're not really sure, the condition of the house that you're buying. But once you enter into a purchase agreement and we're processing your application, we are going to order an appraisal. And the purpose of the appraisal is basically twofold. Number one, it's for a professional to determine if the sales price, hey, I have a sales price of $150,000 for this 3-bedroom bungalow, 1.5 baths in so-and-so city. Is this house really worth $150,000 in this market based upon like or similar properties that have closed within the most recent 6 months to a year? So the value of the house is important because we're lending based upon the value. And an appraiser is going to go through the property when they go to determine the value of the property. And they're not really doing a home inspection like a professional home inspector would be doing. But if the appraiser sees anything that he or she believes affects the health, the habitability, the safety, or the marketability of the property, they may take photographs and say, hey, there's a ripped carpet in the living room. It definitely looks like it's a tripping potential. Or there is no handrail outside the front door, and there's at least 3 steps from the top from the doorway down to the sidewalk. Some loan programs require, hey, a handrail's got to be put up. We don't want my customer falling down the steps. We don't want the customer, after he or she owns a house, have somebody come over and fall down the steps and then sue you for negligence. So one of the things that people don't realize, and they do realize once they get in the loan process, this process of getting you a mortgage, we're going to be saying things and doing things and requesting things, not only to inform us and protect us, but actually to protect you too. Because the last thing we want is for us to be involved in a transaction that closes and something happens to the buyer, whether through loss of job or loss of income, or again, somebody sues them because they tripped on their sidewalk, that affects that buyer's ability, that homeowner's ability to pay the mortgage. So we're doing some of these things not only to protect us, but also to protect you. Income, employment, credit. What else am I missing? Assets. Thank you. So again, we are going to, most loan programs require that you have some skin in the game, so to speak, so that the customer is coming to the table with their own down payment or something that qualifies as their own down payment, that the customer not only has enough money in checking or savings or whatever programs they're going through to come up with their down payment, but 9 out of 10 times the customer is going to have closing costs that they have to pay in addition to the down payment. And right now, closing costs in Northeast Ohio are basically more than some minimum down payment requirements. I tell customers all the time, and they're shocked, or it can't be. It's like, it's the way it is, and it's not the bank. And anything involved in getting a house is going to cost money. Closing costs basically running between $7,500 and $8,500. So you have to be prepared for that. And if you're not prepared, we're going to make sure you are prepared, because we are not going to close on a loan if we can't prove how the borrower came up with their down payment and their closing costs. But again, there are down payment assistance programs that are available to qualified buyers that can help them cover some, if not all, their closing costs, some, if not all, their down payment. It's on a case-by-case basis. It's based upon the borrower's income. It's based upon the borrower's credit scores, And it's also based upon, let's see, the third one. The third one is credit scores, down payment, money available. Oh, and most importantly, location. So if the property is designated in a federal census tract as being in a low or moderate income tract, that will easily help buyers come up with additional closing cost money. And just because a property is located in a low income tract or a moderate income tract, that should not be translated to mean that they're buying in a substandard area. It's just that yes or no, again, depending upon the population in that immediate vicinity, the federal government does a designation of low or moderate income tract. And you'd be surprised, there are many moderate income tracts that are and low income tracts that are actually in very good areas and safe areas. And that's something you're going to investigate as you go start looking at houses. Go to page 4, please. So getting pre-qualified for a loan is a no-brainer. And I tell this to folks all the time. You shouldn't be looking at Zillow. Well, you can look at Zillow, or you can look at all these free websites, marketing websites. But unless you're really serious about buying, and versus just doing window shopping, yeah, window shop all you want, but don't get your hopes up about anything until you get some form of, if you're serious about purchasing a home, then you need to be talking to somebody like me. You need to be talking to some of the resources that we have in the community, CMHA, first-time homebuyer counselor programs. You need to start preparing to put yourself in the best financial presentation that you can to a lender. And the best way to do that is to meet with a lender, or to meet with a counselor, learn the ABCs, the 1, 2, 3s, and then when you think you're ready, then with the lender that you choose, and you have your options, get a formal pre-approval done. Sit down or fill one out online. And the pre-approval process is relatively simple from a process standpoint. With Fifth Third, I can do it in person or I can do it online. I send you a hyperlink, you log in, you fill out an application online. It's just a basic application, name, birthday, vital stats. Do you own, do you rent? How long you've been in your present address? We need a 2-year history. If you pay rent, how much you pay in rent. If you don't pay rent, say that. And employment history for the past 2 years, name of your current employer, name of previous employers, how much you made, how much you're making now, how much you made with your previous employers, where your money is, names of banks, checking, savings, stocks, bonds, mutual funds, 401ks, retirement plans, or if you're getting a gift from a parent or a relative. These are all things that go into a loan application. You press a button, you give us authorization to pull your credit report. We're going to, at a minimum, pull a TransU credit report, and we're going to use that credit report and that credit score to determine the best product and program that you might be eligible for. And if all the pieces fit in the puzzle relatively easily, you've got a pre-approval order that's good for 120 days. So that's something that hopefully you're going to be thinking about doing and trying to prepare yourself for doing. But also on the same page, we're telling you or suggesting to you, be realistic about the needs and wants. Think about how long you're going to stay in the property. If you have children, or even if you don't have children, sometimes you should still consider the school district and their reputation, how close you are to shopping, and if you have to commute times, or whether it's by car, by bus, by Virgo, or whatever. Will it be easy for you to get back and forth to work, depending upon our Northeast Ohio weather conditions? And you need to communicate all of your wishes and your wants to a real estate agent. And at some point, you're going to need to hook up with a real estate agent. And there are many great real estate agents out there. we've just entered into a program with a company that will match you up to a real estate agent who specializes based upon your profile, and they will give you a credit towards your closing costs. Most real estate agents will not do that, and I can give you more information on that at a later point. But yeah, we're trying to help you find the best realtor to serve you and possibly reduce your costs. Vice versa. Personally, there are still phenomenal real estate agents that are out there that I've recommended, that I work with, and will continue to recommend. So you've got plenty of professional real estate agents that want to help you find a home. Turn to the next page, page 6. So again, following up to what I just said about real estate agents, ask friends and family for referrals, seek out experience, commitment, and full-time status. Not that there's anything wrong with a newer real estate agent, but for something as important as your home and your wishes and desires, I'd be hard pressed to recommend that you work with a rookie, somebody who's been in the business less than a year or so, unless they're really mentored. So if they're with a real estate group and they're mentored for everything that they're doing, yeah, then that makes sense. But there are plenty of real estate agents out there that have as much experience as I have, if not less, that I would suggest you go with a little more seasoned real estate agent. And the reason being is because just like our artificial intelligence programs know, they know the market. They'll help you navigate the local market. They are required to represent you. It is now law that a borrower, you have to sign an agreement with a real estate agent that says that you understand that the real estate agent represents you. The real estate agent is telling you he or she represents you. They don't want customers that are jumping around from agent to agent because it's a waste of their time and their resources. And also, you may be selling yourself short by just changing real estate agents every couple of weeks or every couple of months. You can still get out of those agreements. And I'm not a real estate agent, I'm not a lawyer, but I've seen customers, ask the real estate agent, "Hey, I want out of this agreement," and the real estate agent is not going to say no, because again, at the end of the day, they want to do what's best for you. And if the relationship isn't strong enough, then why would they want to be in a relationship that's not beneficial to both parties? Turn to page 7, please. And I'm sorry that I'm reading some of this. But again, the professionals out there that can help you get a house, a home that you're comfortable with and that you're happy with. In this day and age, 90% of all people that buy houses hire a private home inspector. The cost is anywhere from $350 to $550, depending upon the type of house and the size of the house. The home inspector is, again, certified. Some of them aren't licensed. It's very rare that you get an engineer that's a home inspector, but you have people that came from the trades and that have the years of experience of inspecting properties. And they go through a very comprehensive, from the outside to the chimney, to the inside, to the basement, to the crawl spaces above the roofs. They're doing a comprehensive inspection, very professional, a lot of photographs. They highlight good, bad, ugly, with different color codes. And if they see something that concerns them, they are going to suggest that you may need to seek out the opinion of another professional that specializes in, let's say, furnaces, or that specializes in foundation walls, because these inspectors don't want to put themselves into a liability situation either. by saying, oh, this is okay, you really shouldn't worry about it. And lo and behold, it becomes a problem post-closing. You can always hire a real estate attorney. Not that I'm against attorneys. For the most part, most real estate agents, again, they're extremely licensed and regulated. Most real estate agents can provide as well, if not better, in my opinion, service than attorneys can. Attorneys are good for commercial loans, commercial real estate. For something like residential, again, your real estate agent, and again, you can hire an attorney. So I'm not going to tell you not to. Most purchase agreements these days, there's this thing called a warranty, a home warranty. And that's for folks where the seller will pay the cost of a home warranty for a year. You need to do your research and find out what that warranty really covers. But again, they do come in handy. They do come in handy after you move into a house. If the washing machine should break or the roof starts to get a leak, you pick up the phone, you call the home warranty company, and they'll be out there in a jiffy. And hopefully, your out-of-pocket cost should be minimal at best. Page 8. I've kind of intimated some of this stuff. Don't rush. Don't rush. Take your time finding the perfect home. Again, you're going to live in this house. It's the largest investment you'll ever make in your life for the most part. There's no reason to rush or to feel pressured to buy a house just because you like it or because somebody else tells you it's a great house. Do your due diligence. Presently, don't negotiate contracts without your real estate agent. The real estate agents have set up so that they don't want buyers and sellers talking to each other directly. You can talk to the agent through your real estate. You can talk to the seller through your real estate agent, who will communicate in uncertain terms to the seller's real estate agent, and the ping pong will go back and forth. But that's the best way. Sometimes when there are private conversations between the buyer and seller, things that are said that people believe will become contractual. And if it's not in writing, it's not a contract. It's not part of the contract. So talking to the seller directly is strongly dissuaded. Even though I can tell you that I can get you approved for a house payment of $1,800 a month, if you don't feel comfortable with that $1,800 a month house payment, you need to stop and think, is this the right move for me? Because again, you have to take into account that, as we said earlier, it's your house. You are responsible for any maintenance that needs to be done. And if you know that you're not in a position based upon your income, even though you may qualify based upon our debt to income requirements, but if you feel uncomfortable with having that much going to your house and that affects your ability to save money for emergencies versus paying for those emergencies with a credit card, and if those credit card bills start going up, and it affects your ability to pay your house payment, you have to be honest and say, is this something that I think it can handle? Yeah, great. The bank will say I qualify for it, but I know me. I know the way I manage things. I might be better off if I could look for a house with a lower house payment. And the best part about it is, if you're a first-time home buyer, well, that's the best part. You're a first-time home buyer. You have every intention of not being a first-time home buyer for the rest of your life. At some point, you're going to be a second-time home buyer. So if you start off from a comfortable position as a first-time home buyer, you'll learn the highs and lows of that. Then with the equity that you built up for living in the house for 3 to 5 years, this free money that the market is giving you based upon your house appreciation, you'll be in a stronger position when you go to buy your second home, and you'll be happier knowing that you had the first experience and that you can learn and grow and use that experience to be successful on your second or third home purchase. Again, I've been doing this for 35 years. I've done loans for the same customer. I've done loans where it's the fifth, the seventh loan that a customer has gotten for a house that they were buying over 30 plus years. So depending upon your age, there's a strong likelihood that the first house you buy will not be the last house you buy. Don't underestimate the power of competing buyers. That's great for you to realize that we're in a real estate market right now, and we have been in a real estate market for the past post-COVID, where the supply of properties available for sale does not meet the demand from buyers trying to buy those properties. It's still, right now, a property comes on the market today, shows up on Zillow today. There are instances where within 2 days, that property shows as pending. So in 1 to 2 days, 3 days after a property comes on the market, it's basically off the market because the seller has found a buyer and they are in agreement on the terms and conditions, and they're selling that house and that buyer is closing that house. And what this is telling us is that, so great, you've got a pre-approval for that house. Even before you can get out and see the house, somebody else has bought it. So working with the right real estate agent will hopefully set you up from an expectation standpoint of whether you should jump and jump fast and jump hard, whether you may need to overbid on the asking price, which you need to consider. You have to take into account. Well, I only want to spend $150,000. Now I got to spend $155 or $160. But is this house worth me spending $10,000 more than I wanted to? Am I going to be comfortable with the house payment? Do I even have the extra $5,000 to $10,000 to put down for my down payment? So again, at the top of the list was don't rush into anything. You need to be cognizant of the fact that you're about to go out into a market where it's a dog-eat-dog market, and sometimes the big fish is eating the little fish, and you just have to accept it and be patient and understand the process and have faith that in life, in real estate, as like in life, just have to be patient at the right place at the right time, the right house. You are going to have the right house. You're going to win the bid, and you're going to be able to own the house. So those are big don'ts and big do's. Be patient. Don't rush. Make sure you're talking and you're talking honestly and fairly with your professionals, so that you don't put yourself in harm's way and buy a house that you can't afford or that you really didn't want, but you felt pressure to. Page 9, we're going to take a step back. But this is part of the approval process. And when we talk about income, I said it earlier, it's based upon pre-approval. It's based upon your ability to repay. So it all comes down to income. Do you have the verified income? And then we do a mathematical analysis of how much of a house payment you can afford based upon the new house payment plus your other monthly credit obligations in relationship to your gross monthly income. And for the most part, this range of 28 to 40%, that range has actually gone up, depending upon the product, depending upon the program, depending upon the qualifications of the borrower. You can qualify for as much as 49% of whatever your gross monthly income is, minus your credit obligations that will leave you with a house payment. Same as I said a little while ago, just because we say you're approved for the max doesn't necessarily mean you should buy at the max. You have to protect you. You're your best advocate. You need to know yourself and be true to yourself. What, page 10, what to expect from your lender? Or, well, this form is, it really should say what to expect from your lender regarding fees, or what to expect about the cost associated with purchasing a home. Big ticket items. Whether you want it or not, we're not lending you money unless you have proof that you have a homeowner's insurance policy that's paid for the first year of your home ownership. And 80% of the time, your loan is going to be set up so that your homeowner's insurance and your real estate taxes are part of your house payment. So we take your annual premium. So if your homeowner's insurance is $1,200 a year, we're going to take $1,200, divide it by 100, and that's going to be $100 a month. It's going to be homeowner's insurance that will be part of your house payment. Real estate taxes are paid every 6 months. We're going to set up an escrow account that we're going to include your money so that when the real estate tax bill comes due, the real estate tax bill is going to be sent to Fifth Third. We're going to go into your escrow account. We're going to grab your real estate taxes every 6 months. We're going to pay the county directly. You will never reach into your pocket to pay the real estate tax bill. Your house payment, for the most part, 80% of the time, based on your qualifications, your house payment is going to be one stop and shop. Every month, your house payment, you're going to pay your principal and interest on your loan. You're going to pay your homeowner's insurance into an escrow account, your real estate taxes into an escrow account, so that next year when the homeowner's insurance comes due, you don't have to come up with $1,200. When your real estate taxes come due every 6 months, you don't have to come up with $200, $300 a month in real estate taxes. Those are the big things that you really need to understand, and you should be grateful that you have that opportunity to just not worry about paying the taxes and insurance separately, that it's part of your house payment. Because you're going to have other big ticket items show up every year for expenses that you hadn't planned on, that thankfully you can say, well, my taxes are going to be paid next month. My homeowner's insurance is going to be paid next month. I can cover this car repair without any hassle. There's, again, so I say this closing cost of $7,500, $8,500, and it's a function of sales price and loan amount to some degree. But the costs associated are pretty simple. Fifth Third Bank, we have charges that total about $2,400. So our bank fees are $2,400. That covers processing, our underwriting, our document preparation. All these are like basically all overhead and general administrative costs. Also, that also includes the cost of an appraisal, the cost of a flood certification, a tax certification. That's normal bank fees, $2,350, $2,400. Oh, and of course, the cost of a credit report. Another party to the transaction between the buyer, so there's a buyer, a seller, there's a lender, there's a real estate agent, two real estate agents, in fact, and there's a title insurance company. And the title insurance company, their function is to issue title insurance policies. And the title insurance policies are to protect you as a homeowner after closing if a claim is made against title. If you're getting a mortgage, you're purchasing a title insurance policy to protect us as a lender in case post-closing there's something that comes up with title that might affect your ability to repay us. And the title company also performs functions of a uninterested third party to the transaction that at time of closing is going to collect everybody's money and then disperse everybody's money. So when it's all over and done with, between title companies, between homeowners insurance, between real estate agents, real estate commissions, by the way, closing costs don't include real estate commissions. So when I say $7,500, if the real estate agent that you're working with requires that you pay their commission and you pay their commission, that's going to be in addition to the closing costs. You can negotiate with the realtor to try to have the seller pay their commission or to get a reduced commission that they charge you, but that's something you need to be aware of. Real estate commissions are in addition to private home inspections, which I mentioned before, and in addition to standard closing costs, title, lender, this, that, and the other. For the most part, if you go to page 11, most people these days are getting fixed rate mortgages. And what that means simply is the interest rate is fixed for 30 years, 20 years, 15 years. The principal and interest payment is locked for the life of the loan. Does that mean your house payment can't go up? No, that does not mean your house payment can't go up. Because if you recall, I said, we're going to be paying, for the most part, you're going to be paying to us, and we're going to be paying on your behalf real estate taxes and homeowners insurance. So guess what, kids? Death and taxes are guaranteed. Every couple of years, your real estate taxes are going to go up a little bit. Every few years, your homeowners insurance is going to go up. But if you have a fixed rate mortgage, your principal and interest is fixed, will not go up one penny for the life of the loan. Number one. Number two, there is no prepayment penalty. So if you want to get lucky, win some money, come into some money, if you want to pay your loan off in full the month after you got the loan, you can do that. There is no penalty. The only thing the lenders can charge you is the interest up until the day the loan is paid off. Fifth Third Bank and most banks and mortgage companies, we do FHA loans, VA loans, USDA loans, first-time homebuyer loans that are conventional loans. My point being is that you are going to enter into a transaction where the person, the institution that is doing all this great stuff to help you buy a house, we are involved in the most highly regulated financial transaction in the United States of America. We are here to help you. We are here to protect you. And we are also here to protect our good name and reputation. We're not going to be involved in anything where an auditor or regulator can say, this was wrong, or you did this wrong, or why did you do this? That is not our purpose. We do everything to avoid it, which goes back to the fact of why I said, sometimes we're going to ask you for things. We're going to ask people for things associated with this transaction. We're not doing it just to help them. We're also doing it to protect our reputation. And it's not to mean that we're not compassionate and we don't care, because this kid certainly does. Page 12, and we'll wrap it up. Pay your bills on time. Do I have to tell you that? Of course not. Again, there are resources where you can get your credit reports for free. Figure it out. Ask somebody, how can I do that? I can send you information on how to get your credit reports for free. If you don't know your credit, don't depend upon just what you see on an app, My Karma or Credit Karma, this, that, and the other. Get the printout. Get the credit report from the credit bureau. If you don't know how to read it, find somebody who does know how to read it. If you haven't figured out right now, you need to save money, whether it's to buy a house, whether it's to plan for fixing a car, to buy a car, to get your kids something special for Christmas. You need to have a budget. You need to save money. If you need help with figuring that out, get in touch with first-time homebuyer counselors. Keep your financial records in order. Save. If you don't have them, find them and save them. Because basically, when you go for a loan, we're going to ask for your most recent 2 years W-2s. We may want your tax returns. We don't necessarily need your tax returns. We're going to ask for most recent pay stubs. We're going to ask for most recent bank statements, all the pages. We're going to ask for if you have money at a 401k or retirement plan through your employer. Get some of these financial paperwork organized. Again, just or do the classic create a pile. Hey, this is important. Save it, save it, save it, save it. And with the advent of scanning and cameras, this, that, and the other, if you don't have a way of paper saving, or you want to do it electronically, save it electronically, create PDFs on your laptops, blah, 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 blah. Take a home buyer education. I'm finished. Ask some questions. Sorry, because I see we're running out of time. Yes, as a matter of fact, CMHA does. I sent to Anna Santiago a couple years ago. It's still pretty active. So for the person who's asking for it, get an email address from, and you can do this offline. If they want, they could send you an email address, and then I can find the form and email it to them. No, not really. Knowledge is power. What I like to tell people is I've been doing this a long time, and I don't say that to brag, because what I learn every day is what I know is that I don't know. I learn it every day. So for me, it's about learning a lesson, sometimes a couple of times. If I don't know the answer, or if I've never seen something I've ever seen before, that doesn't mean it's for real and it's something I have to learn from. And if I don't have the answer, I go to the resources that can help me get the correct answer. So for anybody thinking about buying a house, you need to know. Great. You personally don't know everything, but you're willing to try to learn, and you'll seek out the best products, programs, and people that can inform you so that you don't have any doubts in your mind about anything you do.